Hey, just wanted to reach out to all you people that are thinking about buying a house and starting to build wealth for your families. It seems like there's a lot of reluctance for people. So I put together a presentation. Now, this presentation is focused on Laclede County and some of the special programs that are available in Laclede County for first-time homebuyers. But it's a pretty easy process, and I wanted to go through showing a home buyer, potential home buyer, 3 easy steps in what they need to do to be a home owner. So, in 3 easy steps, buying your first home can seem like an overwhelming task. Really, it is not if you hire the experts to help you navigate the details. What I mean by that is, number one, you want to get with a mortgage professional that's been in the business a while to help you build your own financial plan to begin being a homeowner. Take a look at your current credit situation. Get a valid credit score. The credit scores you get online and through your credit card companies and all the different sources don't give you an accurate credit score that's used in the mortgage qualifying underwriting criteria. I can run an actual soft credit pull to pull in 2 bureaus' credit scores to give you an accurate credit score without having it be a hard hit on your credit, and then give you any pointers that need to be done to get your credit score to an area that makes you eligible for whatever program it is that we're looking to get you into. I'll go through some more first-time homebuyer programs here in a little bit. You want to get with a mortgage professional to also help you establish a budget. Let's take a look at what your current house payments are, how well you're able to make those current rental payments, how much disposable income you have. Let's make sure that when you go to buy a home that you can afford the home. You don't want to be overburdened with housing expense right out of the gate and no money in the bank. So we will take a look at the last 2 years of your income and figure out exactly what the qualifying income that we're going to be using for underwriting purposes would be. Once we define your sustainable income, then we can work on getting a housing budget. We try to keep your housing budget, just your house expenses alone, at 30% of your gross budget. So if you make $1,000 a month, then $300 a month is the most you should be paying for housing. There are some special programs to help you subsidize that. We'll go into a small piece of that in the future. But once you get past step one and have your credit in line, you'll be eligible for those programs as well. If you have some other debts that create a total debt to income issue where you have to pay your bills and you have monthly minimum obligations to other creditors, along with the potential new house payment, we'll want to make sure that you can afford all those payments without jeopardizing your well-being of being able to sustain income, save income, feed your household, pay your utilities, do those things. Then once we get that all done, it's the next thing you need to do is you need to get with a real estate professional. A real estate professional that's been in the business for a while, that has some great mentorship if they've been new in the business. But a great real estate professional is somebody that's going to be able to sit down with you, work with you, figure out what your exact needs are going to be for house payment, where you're going to live, the type of property that's going to fit the type of financing that you have approved, because every mortgage loan requires different criteria as far as the property itself goes, the condition of the property, different repairs that may or may not be needed, those types of things. So getting with a good real estate professional that has a great partnership with a mortgage lender is the first step so that you can communicate and be able to get the house that you want. So after you're ready, what's the next step? Well, like I said, the first thing is you want to get with a real estate professional and start looking for your home. You need to decide when the right time it is to buy. I try to tell homeowners every day when I talk to them on the phone, right now is absolutely the best time. Prices of homes are not going to go down. The prices of new construction is going to continue to rise. The availability of homes has not increased for a long period of time. And for many years down the road, we're still going to be short of houses that are needed for all the household formations that we have, which would be you, the first-time home buyer that's going out to the market for the first time to buy a home. Those homes are not available in abundance. So also, I want to go through a little bit of the cost of waiting. If you choose not to buy now, what's that actually cost you in real time? A lot of homeowners are on the fence because, oh my gosh, the rates are too high, whatnot. Well, so rates change over time. They fluctuate, they go up, they go down, but the price of homes don't go down, they go up. They may level off, they may slightly decline for a very short period of time, but then they go right back up. Only one time in the history of this country have we had massive inflation or deflation of home price, and that was due to the fact that we had way too many homes on the market for the amount of buyers that were out looking for a house. So I'm also going to go through briefly, how does owning a home build wealth for your family? It's a confusing thing to a lot of buyers, because you think that a house payment is a debt, which it is a debt, but it's a debt on an appreciating asset. And I'll kind of show you how that works a little bit. And then, should you shop around for a home on the internet? Well, everybody knows that Realtor.com, Zillow.com, Redfin, there's all these lead sites for real estate agents and brokerages and even mortgage companies to buy, that are sold by these high-tech fintech companies. So the data that they get is not necessarily as good as the data from a local MLS that a real estate professional will have access to, but the data is pretty good, and the navigation of those sites are pretty easy. So there's nothing wrong with looking on the internet. A lot of times that information gets outdated, and it's just not relevant. And of course, it is advertising, so sometimes things look better than what they really are. So I always suggest, if you find something on the internet, get back with your real estate professional, let them do a deeper dive, figure out what it is, and then work with them on that. So what happens if you find a home with repairs? I'll go through that briefly. I'm not going to go in depth with that, but we do have a lot of renovation products for first-time home buyers, as well as move-up home buyers and veterans. And those renovation loans are a great way to fix up a house and have that money escrowed for those repairs after closing. So first thing is, you want to get with your real estate professional and start looking for a home. Many consumers are afraid to take this step due to the term, hire a realtor. Well, the process of hiring a realtor is not the same process as hiring other people. You hire a realtor, they get under contract with you that says in the future, when they help you buy a home, they're going to get paid. Typically, those fees are paid by the seller at this point. Things may change in the future, but right now, for the most part, most all of the agency agreements, the seller will adhere to those. But you're having that agent work on your behalf under agency. A buyer's agent has a fiduciary responsibility that represents you, the buyer. In other words, anything you tell that agent is between you and that agent, and they can only shed the positive light for you during a real estate transaction to benefit you the most. The seller's agent will, of course, represent the seller in their best interest. So it's a good idea to have representation for you. That really comes into play once you do find a home and you contract on a home, because the contract negotiations back and forth behind the scenes are sometimes very time consuming, but you, the consumer, don't really get involved in all that. But your agent's got your fiduciary trust, and they'll take care of you. A good buyer's agent will help you make the right decision on all the right details. So if they look at a house and they see a major defect on a house, they're going to maybe recommend that you get inspections, but they're going to mention that defect, and they're going to bring that defect up to the seller's agent or whatever to get more information before you get involved in a contract that you on something that you will fall in love with and not be able to buy. They're also very well versed on the schools in the area, shopping in the area, all those details that you need to know, because when you buy a home, you're going to be there for a minute, so you got to make sure it's where you want to be. They're experts in getting the information you need to make an informed decision, and as a general rule, the compensation is paid by the seller's broker. So when is the right time to buy? So I put together this illustration for the median house price in Lebanon, or in Laclede County, Missouri. So the median house price today is $215,833. I chose one of the loan products that I have in my presentation was a USDA with an MHDC bond attached to it without down payment assistance. So it's a USDA loan, which is a zero down home loan without any bond assistance for down payment. You can typically get the seller in a lot of markets, the seller to help pay some of those closing costs, if not all of the closing costs, and still get into a money with no money down, or into a loan with no money down, and be able to take advantage of some lower rates. So the current rate for the MHDC USDA loan is 5.75%. And the numbers are broken down. So today with that loan, the cost of waiting with the property appreciation projected to be around 2.9% a year, which is really low. I think it's going to be closer to 5.5%, but with just a 2.9% property appreciation, in 6 months, that house is going to be worth $222,096. 1 year will be $222,97, so on and so forth, down to the third year, $236,627. So the house, if you buy it today, is $215,833. That same house in 3 years from now is going to be worth $236,627. If you look down at the bottom of this cost analysis, at the end of 3 years, your cost of waiting would be $29,625. How does that number come about? Well, it basically comes about in a couple of ways. And that's part of the building the wealth piece. You buy the house for $215,833, and then you pay down on the loan each month when you make a payment, and the house goes up in value each month as it appreciates in value. So over a period of time, that turns into an awful lot of money and wealth for your family that you can cash in and buy another home if you need, or you can keep the home and continue to build wealth for your family, and your family will have an asset that they can pass down generation after generation, however your family goals are. Anyway, so buying a $215,833 home versus renting at a current rental payment of, I believe I did $1,200 a month rent plus $30 a month renter's insurance. So after buying 1 year, your monthly principal and interest was $1,272, property tax $239, monthly expenses $1,511, your cash flow. So basically, after a period of 9 years, your gain of wealth versus renting is $130,092. That also takes into effect your cost of selling the home at the end of 9 years, which is projected to be a 6% commission that you'll have to pay when you go to sell this home in 9 years. So the incredible change in just 9 years of wealth to your family is a lot. What's the cash flow difference? Well, the cash flow difference is a little bit negative because you are paying down on the principal of the property. You are in a fixed rate. So your payment is not going to change or fluctuate over the years. The estimated rent, going up, could go up a little more than what I projected. I was very conservative. But your cash flow difference in that 9-year period of time was a negative 8476. However, you were able to grow $130,092 in conservative numbers of wealth in equity. So the other question was, should you shop around on the internet for homes? Well, I touched on it briefly. Those sites are all about selling leads. So if you put your contact information into any of those forums online, you're going to be bombarded by an awful lot of people, including mortgage companies, as well as real estate agents that subscribe to the services and get sold these leads. And if you're already working with a sales professional that you trust, it's a good idea just to shop around, take a note of the address, take a note of the property, and get it with your real estate professional and let them do a professional background search on that house to make sure that the data is accurate. I do have a site where you can go in and the QR code is here as well as the URL link, but you can actually go in and shop for homes on a system that's run on a Black Knight data system. It's not going to be 100% accurate on the estimated values of the homes, but it's going to keep track of accurate listing information and stuff like that. And there's really no lead capture component to that, but you can look around, shop for homes, and also get back with your real estate professional if you want to get some more information on that home. So what happens if you happen to find a house that needs repairs? I have several different products, loan products for homes that need repairs. The least amount down for a non-veteran is a 3.5% down FHA 203K program. But if it's something that you find and you're in need of, I'm more than happy to look into that. You will have to have at least 3.5% down. If you're a veteran, I have the no money down program for renovation where you can buy a home and actually get the money to fix it up after closing. Those programs are fairly easy to navigate. We handle most all the paperwork. The hard part to the consumer is finding a good, reliable contractor to be on time with their estimates of all the repairs that need to be made and getting all that information in so that we can get the loan completed. Anyway, I just thought I'd get this out to everybody. If you don't live in Laclede County, that's fine. But the homeowners need to know that now is absolutely the best time. I know interest rates in the media and interest rates in reality are at a very high point. Inflation is starting to improve, so rates will be coming down, which is only going to add fuel to the fire for the availability of homes. So right now is absolutely the best time to get pre-approved for a home loan, which means you've actually made an application and you've actually provided income documentation and you've had your credit and everything done so that you can offer a valid approval letter. And with us, with Primelending, we'll give you an on-time close guarantee. And if you don't close on time with our guarantee, then the seller can get rewarded with a $5,000 bonus, which we haven't even had to pay out yet. So we don't have a problem once we have a loan approved, getting that loan closed in a timely fashion. So I hope this information is something that you can use. If you feel like someone else would like to get that, would need this information, feel free to share this information with anybody you want. Please subscribe to my YouTube page if you've come to this recording on that page. I'd love to get more followers of the page so that I can promote home ownership here in Lake of the Ozarks area. Thank you. Bye.